our theme on listed investments this week. Today I'm joined by Morningstar's Tim Murphy to look at what sort of opportunities are available in listed investments when it comes to global equities. Tim, lovely to see you again. It's been a while.
Hi Christine.
Tim, firstly, what sort of listed investments are available in global equities, say for example exchange traded funds?
Well, you've got a range of different options. If we talk about ETFs, exchange traded funds first, that's probably where the widest range of options is, from broad, diversified, global equity funds that can invest anywhere in the world, through to narrower, regional focused funds, so funds that only invest in America, so like the S&P 500 index, for instance, or in specific regions like Europe or Asia. You then drill down further, you can buy single country funds as well, like Japan. Or alternatively, you've got sector funds, so you can buy global consumer staples or global telecoms ETF, for instance. So there's a range of different options on the ETF side.
And listed investment companies or LICs?
On the listed investment company side, they tend to be, for the most part, broadly diverse funds that can invest anywhere in the world. So names like Magellan and Platinum, for instance, are two of the bigger listed investment companies who have mandates that allow them to invest anywhere right around the world.
Tim, so what sort of companies do those sorts of investments invest in? Do they tend to be more of the large cap companies?
It really depends on the listed investment company you're talking about. So they're all driven by underlying active asset managers. So in the case of someone like Magellan, most of the companies tend to be fairly mega cap, well-known large names, so like American Express, Yum Brands, which owns KFC among other things. So really big large caps in that case. When you look at say someone like Platinum, they tend to have some much more esoteric names. They've historically had larger exposures to many smaller companies in Asia in particular that most Australian investors would never heard of, but clearly offering attractive investments and have done well over time.
Tim, you mentioned broad exposure, sector-specific exposure and even country-specific exposure. When it comes to global equities, is it better for investors to take more of a broad approach?
Like anything, it always depends on your own individual circumstances. As a general rule of thumb, we encourage people to take more diversity rather than less when building portfolios. So certainly, taking a broad-brushed exposure to global equities, I think makes sense for the vast majority of investors. Whereas people's willingness and need to invest in a single country fund, for instance, is probably questionable in most circumstances, and as is their ability to actually time that decision right, because often people get excited about some of the narrower type investments after they've done well, which is usually the worst time to invest in such narrow areas.
Tim, so what sort of role do these listed investments play in an investor's portfolio?
Diversity and bigger breadth of opportunity are the two big factors, I think. Clearly in Australia, it's a very narrow market, heavily concentrated in banks and resource stocks at the top end. Whereas when you go into global equities, you're giving much broader exposure to sectors like healthcare, to sectors like technology, which really are sort of bit part players of the Australian equity market. Additionally, the diversification benefits from things like currency exposure, for instance, are often underplayed. With lots of commentary out there about where the Aussie dollar at, is it overvalued, is it fair value and whatnot. Having offshore currency exposure from a diversification perspective, we certainly think makes sense in most cases out there for investors.
Tim, you raised an interesting point about currency. So finally, what sort of issues should investors take into account when it comes to global equities, particularly with currency and hedging issues?
Sure. So the majority of listed investment companies and ETFs investing globally are unhedged, so we're going to give you currency exposure. There's at least one ETF that is hedged, if that's what you really want. But the majority are unhedged, so you are taking exposure to the US dollar or the euro or the British pound, depending on whatever the particular underlying exposure is. So, as I said, we think that is a benefit for portfolios, but again, it comes back to your own individual circumstances to consider as well.
Tim, thanks again for your insights.
No worries, Christine.